Hi, I'm Gary from Westwood Estate Planning. Now, are you thinking about gifting your home to your children to reduce inheritance tax, but you'd still like to live in your home? It's one of the most common questions we hear, and for good reason. The idea seems straightforward. Give away your property now, continue living in it, and reduce the size of your taxable estate. Everybody wins, right? Unfortunately, this is where many well-intentioned people unknowingly walk straight into one of the most expensive inheritance tax traps, the gift with reservation of benefit. In this video, I'll explain exactly what this trap is, why it catches so many people out, and most importantly, how you can genuinely gift assets to your family without falling into it. So let me give you a real world scenario that plays out regularly. So we've got a lady named Susan. Now she's concerned about inheritance tax. She decides to gift her £400,000 valued home to her two daughters. Property is legally transferred into their names. Susan feels relieved. She's just removed £400,000 from her taxable estate, potentially saving her family as much as £160,000 in inheritance tax. But here's the problem. Susan continues living in the house exactly as she did before. She doesn't pay her daughters any rent. She pays the bills, maintains the property, and to all intents and purposes, nothing has changed about her day-to-day life. When Susan passes away 8 years later, her family is shocked to discover that HMRC treats the house as still being part of Susan's estate. The full £400,000, or its value at death, is included in her inheritance tax calculation. The family faces that potential £160,000 tax bill that Susan was trying to avoid, but now they don't even own the house. The daughters do, creating a complicated mess to sort out. This is a gift with a reservation of benefit, and it's exactly what the rules are designed to prevent. So why does this rule exist? The principle is actually quite straightforward. If you give something away, but you continue to enjoy all of the benefits of owning it, then you haven't really given it away at all, have you? You can't have your cake and eat it too. The legislation ensures that people can't simply shuffle assets around on paper while their actual circumstances remain unchanged, purely to avoid tax. And while that might seem harsh, especially when your intentions are good, it's a line HMRC enforces strictly. So the reason this catches people out so badly is that it delivers really the worst of both worlds. First, you've given away legal ownership and control of your asset. So your children now technically own your home. If they face financial difficulties, divorce, bankruptcy, then really that asset is at risk because it's theirs, it's not yours. You've lost the protection that ownership provides. Yet, despite giving away control, you've achieved absolutely no inheritance tax saving. The asset is still counted as part of your estate when calculating your tax bill. Your family gets hit with a full 40% tax rate on that asset's value. Now, this isn't just a theoretical problem. I've known of families devastated by this, having to sell properties they thought were safely protected or scrambling to find hundreds of thousands of pounds to pay an unexpected tax bill. So, is there some good news? Yes, you can legitimately give your home away and reduce your inheritance tax liability. You just need to do it properly. There are two main ways to avoid this reservation of benefit trap. So, first, the simplest approach is genuinely to give away your home and move out entirely. If you gift the property to your children and then go and live somewhere else, whether that's a rented flat, a smaller property that you purchased, or even with other family members, there's no reservation of benefit. The gift is clean, and after 7 years, assuming you survive that long, it's completely outside of your estate for inheritance tax purposes. This works because you've genuinely relinquished all benefit from the property. You're not using it at all. That could work for some people, but for those that want to continue living there, then ultimately, if you still do want to live there, you must pay your children or whoever you've gifted it to a full market rent. And this isn't just a token gesture. The rent must be truly commercial. What would an independent tenant pay for the property? If market rent for a similar property in your area is £1,500 a month, then that is what you need to pay. Not £500, not a contribution, the full amount. It must be paid regularly and consistently. Monthly standing orders that you can evidence to HMRC if required. And it must be properly documented. A formal tenancy agreement between you and the new owners, just as if you were renting from a landlord that you didn't know. And lastly, review annually. Market rents change. Your rent needs to be paid and keep pace to remain legitimate. If you follow this approach, you're paying for the benefit you're receiving, which means there's no reservation of benefit. You're a tenant paying rent just like any other tenant would. So I won't sugarcoat this. It feels strange to many people. You're paying rent to your own children to live in what used to be your home. But it's the price of making this strategy work legitimately. So it's important to understand that avoiding the reservation of benefit trap doesn't mean the gift is immediately outside of your estate. The gift itself is still a potentially exempt transfer or PET, which means you need to survive 7 years after making it for it to be completely inheritance tax free. However, if there is a reservation of benefit, this 7-year countdown is irrelevant because the asset is treated as still being in your estate regardless. Avoiding the reservation trap is the essential first step. Now, just as with every aspect of inheritance tax planning, meticulous records are absolutely crucial here. If HMRC investigates your estate after you've passed away, your executors will need to prove that no reservation of benefit existed. This means keeping complete documentation of the gift itself, property transfer documents, deed of gift, so on. Now, if you're paying rent, you need that formal tenancy agreement that we mentioned, evidence of every rent payment made, annual rent reviews, and proof that the rent was at market rent rate. Estate agents' valuations can help here. Without solid records, even a perfectly compliant arrangement can be challenged by HMRC. And when that happens, it's your family who will face the consequences and the stress of trying to prove that everything was done correctly. So here's what I'd encourage you to think about. If you're, for example, considering gifting your home to reduce inheritance tax, the question isn't just whether you can do it, it's whether it's the right strategy for your specific circumstances. For some families, genuinely moving out or paying market rent does work well. For others, there are better ways to reduce inheritance tax that doesn't require giving away your home at all. This is exactly why we offer a free, no obligation 15-minute conversation. It's not a sales pitch. It's an opportunity to talk through your situation, understand what's actually possible, and make sure any steps you take genuinely protect your family, not just create expensive problems down the line. So you can book a time that suits you in that description below or on our website. Let's make sure your estate planning actually works for you and your loved ones. So thank you so much for watching this video. I'm Gary from Westwood Estate Planning. If you found this helpful, please give the video a like. It really does help other people find this information. Now, we publish videos like this every Thursday, so please consider subscribing to stay updated, and I will see you on the next one.